Hey everyone, welcome to the KE Report, a daily editorial on Monday, September 22nd, chatting with TG Watkins. TG is the director of stocks at Simpler Trading, also editor of the Profit Pilot website. We'll post a link to TG's website in the show notes. TG, something that we've been asking a lot of the traders that we have on the show is what is your bull market playbook right now? Because almost no matter what sector you're in, or at least a wide range of sectors, are continuing to move higher. They're breaking out. Some stocks, some sectors even have gone absolutely vertical. I know you spread your portfolio out. You share with us all kinds of different ideas in all kinds of different sectors. But if we take a step back from individual plays, what is your bull market playbook right now?
Well, I love the small caps, but they only work in certain conditions and certain market environments. And well, right now is that environment. We have rate cuts happening. We have apparently two more coming in 2025. The economy seems to be doing well. We're kind of pro-growth. Trump administration is pro-business, and we got a lot of stuff going on. Plus, they're doing a lot of deregulating, and they're giving guidelines for the crypto industry. So, yeah, the risk is on basically. And this is what I love to play because small caps just can move like crazy when they get going, and I just love it. That's a lot of fun for me.
Well, TG, when you talk to some of your subscribers and some of the people in your chat room, and they're worried that maybe a stock has gone so vertical, they're getting nervous. You mentioned off mic, there's a couple different ways you can play that, so maybe walk people through that thought exercise.
Yeah, actually, we have a few things like that, and that's why the conversation's coming up. We're an RR, that thing's up like I think 120 or something percent from our entry. We played IONQ and IONL, that's 150% just on that leverage ETF. We're in, gosh, what else we got? A few other names that Tesla that has gone straight up. And so people get kind of nervous when it's up there, and rightfully so. And there are a couple things you can do depending on either what your position is, what your strategy is, and what your plan is. If you don't want to sell, okay, if you have stock and you don't want to sell your original position, well, you could try and sell some covered calls. Now, you got to be good about that. You need to know exactly where price is going to turn down or pull back, and that could be a little bit risky. And if you get it wrong, it could be basically a tax on yourself. You're just taxing yourself. So, that's maybe a little bit higher challenge as far as difficulty. You could also just take profits when things get extended, take profits and wait for the next pullback flag or dip opportunity to add back in. Or if you really have confidence in the stock and what it's going to do, and we have a good environment, you understand that it's getting a little bit frothy and too high, and you just are prepared that it's going to pull back, and then you don't panic on the pullback. And as long as you have some dry powder or got some cash left, maybe you add more to keep building your position on those pullbacks. And so that's generally the three kind of directions that I tell people how to handle some things.
TG, are you worried about just how well everything's going right now? Because it can be some safety plays, it can be some growth plays. There's just so much going up, and there's so many sectors, even the small ones, that have gone up so much vertical. Are you getting worried at these levels?
What's funny is it feels that way, and I think that's because maybe you guys, as far as radio hosts, and then me as a trader who's looking at this stuff actively, it might feel that way because we're talking about all the ones that are winning, and there are quite a few and a good variety of names that are really doing quite well. But if you actually look at breadth right now, only 41% of stocks are over their 20-day SMA, and only 54% of stocks are over their 50-day SMA, and they have been declining since basically the peak was at the end of August. And we are technically in a very seasonally weak portion of the calendar year, but the market basically flagged through August into September for about 6 weeks and then broke out. So yes, I'm basically bullish, but it seems as though as time goes on, more and more money is concentrating in the names that are working, which is why we are seeing breadth come down. And I could see either two things happening. Either one, the weakening breadth is going to catch up to the market and we're going to get a pullback or correction or who knows what, something like that. Or underneath the surface, we have names pulling back. And if the market stays up and elevated, then eventually those names that have been pulling back will find support and start cycling back up. And then we'll see the breadth start to catch up to the market. It's a little bit hard to figure out which is, chicken before the egg or chicken and the egg right now, which is, I'm just playing the names that are working and I don't care too much, except that I am aware of what's happening. Even the SPX seems to be getting a little bit frothy right now. So I am prepared for a pullback, which is why I talk to my subscribers and say, hey, for these names that we're in that have gone straight up, just decide what you want to do as far as how to be defensive. And I think we've done a combination of cashing in some profits and preparing for dips.
Well, TG, another thing that you've been looking at in some of the higher traffic, more widely followed stocks is that some of them actually have leveraged plays on their stock. So some of the chip makers, some of the tech companies actually have leveraged stock options, whether it's 2x, 3x, and you find some interesting data in those from the short side and the long side. So maybe unpack how that's another tool you use.
Yeah, actually, it's funny. Before the advent of all these single stock leverage ETFs, not too many people talked about leverage ETFs in general, from what I could tell. And even those professional traders around me, I'd ask them questions, and they'd kind of write me off and be like, nobody really trades those things. And I was like, I don't think that's accurate. I keep seeing a lot of volume in these things, and I have found out a few very important tricks and telltale signs that these leverage ETFs tell us. And I've done a class on it, but for anybody else out there who's interested, you can come over to simplertrading.com/Moxie and you can come into my trading room and then you can start learning how I work with these things. And I'm seeing some very, very important signs, especially on things like AMD or some of the other ones, SMHL or SOXL as far as leverage ETFs. And that's what we're trying to do is utilize these things because they are amazing and you get really good moves without having to deal with the risk of options. For example, IONL, which is the leverage ETF of IonQ, went up 155%. In fact, I think it's up even higher right now from our entry, but about 155% in a week. And that's option type moves, but you do it with stock. And I just absolutely love that.
All right, TG, to focus a little bit more, you know how much we like talking about the metals sector, and right now, precious metals, gold, silver especially, are continuing to push higher, and the stocks are doing really well. So, whether we're looking at GLD, SLV, or GDX, where do you see some of the best opportunity? How would you trade generally the precious metals or the precious metals equities?
Yeah, it is pretty wild. In fact, I had a subscriber ask me about B, which is Barrick today, and these things are just going absolutely incredible. In fact, it looks like Barrick has almost doubled in just a few weeks, really. I usually like to play GDX or GDXU or NUGT, which are the leverage ETFs, and they've been doing amazingly well. The only thing I'm going to say is that they're almost doing too well. And it's kind of that point where we talk about is like, well, what do you do when they're so high? I would just say you need to be careful up here about initiating new positions because the move has already kind of happened. Yes, it could keep going, but the bulk of the move, at least if you're looking at GDX, the bulk of the move happened from 52 and a half, and now we're at 73. Like now we're really kind of getting into the nosebleed section, and it's great to see. But at some point, the smart traders are going to be realizing that the risk to reward is not in balance. They're going to be taking their profits, and they too are going to be waiting for this thing to come down at some point. And then you give the people who like to trade short, and they're going to start seeing opportunities on the short side. So, right until the wheels fall off, but also just be prepared to not get super aggressive up here on the long side because you should have already made your money from much lower if you're going to be doing this thing. You don't want to be, you need to know when to not chase. And that's kind of what we're seeing with GDX. And gold has done amazingly well too. In fact, maybe it can kind of keep going a bit, but you want to find the dips and you want to find the flags and good support areas to get into, not chasing the highs.
Well, TG, because so much of our audience is piled into a lot of gold equities, when you talk about using the leveraged ETFs, there are things like JDST and DUST, which are basically short the GDX and GDXJ. Do you think those would be a good hedge for people to consider right now if they're long a basket of stocks? They don't want to sell for tax reasons, but they are concerned we're getting a little toppy. Would you use those vehicles, JDST or DUST?
Yes, it is possible to use them. I haven't found that they give me any clues or signals. I try to look for things that are telltale signs, and I don't really find that with these contra ETFs or inverse ETFs. They're really just, if you're going to use them, just use them. Just understand that, they're going to be inversely correlated. They're nothing that you want to hang on to for a long time because there is slippage and there's decay. But if you want to start putting on a hedge, do it. you can use those. It's a great vehicle to do that. And it just always comes down to timing because if you're in it and the main one you're in keeps going up, well, you're just going to neutralize yourself. Especially if you buy, if you own 10,000, you buy 10,000, you could just neutralize yourself, which, hey, maybe that's what you want as at a certain point. So yeah, I use them all the time. They're perfectly reasonable. Just understand the tool that you're using so that you're not surprised.
So, TG, where are you seeing some of the best opportunities? You don't need to give us all your secrets. I know those are shared for subscribers, but any little insights, any nuggets of tips here that we could trade off of?
Yes, yes. Of course, the semiconductor space is still hot. SOXL, the semiconductor leverage ETF, still doing well. AMD is doing well or starting to do well. Nvidia just had some news that they invested 100 billion into OpenAI. I literally 5 minutes ago, I just saw that come across my phone. So if you look, that's moving. So that space is doing well. I also like quantum, but that's kind of already popped. You're gonna have to wait. Really, what I like right now is the drone space, drone stocks. And I have a couple that we have been trading and waiting patiently, and they are just now starting to move, and I am very, very happy today about their moves. So yeah, that's kind of the next space I'm looking at because they're not overdone, they're not frothy, they're not sky high. I think they have a lot of room to grow, and we have basically been loading up hardcore down on these lows and bases.
All right, TG. Always fun chatting with you, especially in a bull market. But hey, you're the type of trader that even when it's not just a raging bull market, you're still finding opportunities out there right now. A lot has moved. Hopefully, our listeners have been positioned in a lot of these. And quite frankly, hopefully, we do keep on seeing some positive action here. Bull markets are good, even when they feel a little uneasy because they keep going. That's still the definition of a bull market, just climbing that wall of
Yeah, and
worry.
Corey, as part of that, everyone's always worried about it ending and stuff like that. Just remember, there's the old adage that more money has been lost preparing for a pullback than the actual pullback itself. We are in a good market. We have rate cuts. We do have the wind at our backs. Yes, maybe things can get a little frothy and overdone. That's okay. Just be prepared for pullbacks, but I wouldn't be prepared for things to just crash and implode. And so if you guys are getting nervous or having a hard time walking through this, that's where you come over to my trading room. I'm on the mic every single day talking to you guys through this, and we're still seeing lots of opportunities that I think will help make you guys feel a little bit more comfortable that even if certain sectors get overbought, the money will just rotate into others. We're still in a really good environment.
All right, there you go. Click that link in the show notes. Follow along with TG. TG, as always, thanks for your time today.